Hello, everybody. I'm Dale Pinkert. How's everyone doing? If you have any questions for me after the event, feel free to email me. Here's my email address. I'm an independent analyst for fxstreet.com currently. No other affiliations. How's everyone doing? How many dollar bulls? Give me a bull or a bear on USD here. Okay. We're going to do something a little different here today. Normally I go through forecasting the pairs and what I see developing in the markets. What I'd like to do is give you an insight into my process of how I think about markets, how I start my day. Yeah, maybe I'm strongly neutral here. I have a bias still to the downside in the dollar. My process from the time I wake up in the morning, I live in California, so I'm up at 4 a.m. taking a look at the final hours in Europe. And the first thing I'll do, of course, is you put the coffee on, right? After that, while I'm firing up my computer, everyone has their own taste, but I'll use CNBC and I'll turn it on just to get a feel for what's happening. Is it a green day? Is it a red day? The S&Ps, are they up? What's going on with gold? What's happening with the crude oil market? How about the bonds? So I'm paying attention to all these things because I believe in correlations, and I'm looking at the relationships to give me some type of market message, because I feel the real key in this business is trade selection. Give me a why if you understand trade selection. How many in here have been right about the direction of the dollar, okay, and they've been short the wrong pair or long the wrong pair, that did not participate in the move that they were correct about? Or in the stock market, the DAX or the FTSE is going up and you thought it would go up, but you bought an issue that wasn't participating in the rally. I've done it. Anyone else ever do that? It means that your trade selection was not good because you weren't able to participate in the move that did occur. Perhaps because you were trying to buy something that was cheap, that was very depressed, instead of buying something that was already showing signs of strength and advancing because you felt late about it. Give me a why if you've experienced that psychology before. So, or we start top picking something that is a rocket ship instead of shorting something that is only rallying in sympathy. So what I use is the metaphor of American Idol, that you could have a great voice, you could be a great singer. If you choose the wrong song, your performance will not be as good. In our business, it's trade selection so that your performance will be good, or poor trade selection so that your performance will not be good. So what I do is I use these correlations to help me define what my preferred buy candidates and sell candidates are, based upon how they're acting in relationship to each other within certain groups. And why don't we go right to the FX pairs here, and I'll talk about these relationships. Let's start off with USD CAD. Now, anyone in the room, tell me what type of currency USD Canadian dollar is. What's it classified as? And what does it correlate with? Waiting. Keller, you're right. Lopez, you're right. Percival, what do you think? And we've had quite a run in oil, right? Okay, and therefore, since it's run in oil, this is where the oil bottomed right around the 77 level, and since that time we've had Canada sell off. So you're correct in that relationship, right? In the direction oil's going up. Actually, it's the way it's paired because the USD is in front of CAD, unlike it being second in its close relative Aussie USD, where USD is placed second on the pairing. But I actually consider the USD CAD and the Australian USD to be very closely related, so closely related that they're brothers. They're in the same family. Okay, also the Kiwi, which is the sister of the Aussie and the Canadian dollar. So those are the relationships. These are all commodity currencies. They're natural resource based. They have other relationships and correlations that I follow, but I just want to start off with USD CAD and call its immediate family, its brother and sister, Aussie and the New Zealand dollar. Everyone have that? Hi, Sal. Okay, so we'll stay with USD CAD here, and the USD CAD has other relationships besides the other commodity currencies, and we have some very smart members that know that if there's a high correlation to oil compared to Aussie, you might be thinking more about gold or copper because it's more of a mining, looked at a mining producing commodity country, where Canada, although there's mining, almost known as a petrocurrency. It's gained the reputation of a petrocurrency. So let's keep in mind that this is our closest relationship between USD CAD, Aussie, and the Kiwi. But the USD CAD has a cousin, and its cousin is USD Swiss. Okay, why are they related? Anyone know? Let me give it a study. Why would I look at the relationship and which one's stronger or weaker looking at USD CAD and USD Swiss? Anyone want to hazard a guess? What happens when the stock market goes down? Which direction does USD CAD go? Normally. Right. Okay, that's the relationship. Okay, they're very good, NCG, because when risk is coming off, USD CAD goes up and USD Swiss goes up. So, the last several days they've been moving together, but last week when I was talking about the last 2 weeks, when I was talking about what would be a preferred short, knowing they're related, right in here was USD CAD last week, okay, on the 12th. Right up here. I talked about looking to sell about 61.8 back, and you look at its cousin, And here's the same time frame. Of course, it's finally the Swiss has given some back, but knowing that they both go up when risk is off, I then ask myself, which would be the better short when risk comes back on? This or this? Okay, so knowing they're related and seeing in the chart how much weaker USD CAD was, all we had was a retrace move, right? Whereas in USD Swiss, you made money being short up here, but you would have been shorting the relative strength instead of the relative weakness. Give me a why if you understand that. And why I correlate them. They're both risk-off pairs, but when I compared the two, when one was only retracing, same day, the 12th, same day, the 12th, right, but the diagnosis was shorting the relative weakness on the correlation. That was the point. If all Canada could do in a hostile environment when risk is coming off and crude was coming off a bit, what would it do if the environment changed? So obviously between the two, this was your preferred short. And on break, what's going to be your preferred long? If you think the dollar is going to go up again, are you going to buy Canada making new lows? Or are you going to be buying Swiss, basically correcting in some type of consolidation? This looks more likely to make new highs before this, doesn't it? So that's what trade selection does for you. And looking at the correlations. Okay, so we've covered some of these relationships regarding the commodity currencies, and there'll be times when Canada will not be making a new low and Aussie will be making a new high. And there'll be messages in that as well. So if you're a student of the market, I would start paying attention to the relationships, and then you'll notice during certain market situations where something is lagging dramatically or leading dramatically, and you want to buy the leaders on pullbacks, and you want to sell the laggards or the ones rallying in sympathy rather than leading, you want to sell them. And the other reason is I'm not Noster Pinkert, and sometimes I'm a day early. Who's ever been a day early on a trade? Or even a few hours on a trade? And they've been right about the trade, but their timing wasn't perfect. Who in here doesn't have perfect timing? Am I the only one? Anyone who says they do, you probably don't want to listen to them. You do? You tell her you have perfect timing? Abel? Okay. Well, if your trade selection is good, okay, not always, not after two non-confirmations. We'll get into divergences later. But if you pick the right trade and your timing is imperfect, it will be more forgiving than if your trade selection is bad. Give me a why if you get it. Therefore, if you're short something that's weak, and say you were early, right? And you got short Canada here on the 9th, but you're short the Canadian, right? 102.10. Yes, it went to 102.50, so you had a drawdown of 40 pips. If you did the same trade on the 10th in the Swiss, you were short from 97.75 and you had a 100 pip drawdown before the market started to come off. So by analyzing the relative weakness, you didn't take as much heat. Give me an amen for not taking as much heat, because we all take heat. And we want to take as little heat as possible. This is a method for doing it. Give me a Y if you get what I'm talking about today. It's more important than for me to make a forecast that turns out to be reality. I've done that many times here. I want to teach you guys to become independent of, rather than dependent on, anybody. Only dependent upon yourself. And this is a methodology. I'm not saying you're going to learn it overnight, but you begin to watch your screens and notice these things. And if you need to, have a list of preferred shorts, preferred longs, and then follow that list so that when your preferred long selling off, you know that's a break to buy, and your preferred shorts are rallying, you know that's a rally to sell, if you diagnose them properly. Who does this make sense to? Okay, let's move over to the pound. So the pound, I correlate with the euro because I consider them, even though the pound dollar is not part of the euro currency, I still consider it euro. Okay, so they relate to each other. They're like Canada and Aussie is to each other. Pound, dollar, and euro are to each other. So here's a classic example and a trade call. I was looking for 154 in the pound before this recent rally. We took it out a bit, and I was looking for 121.5 in the euro, and we didn't quite, we went to 22.43. So if you correlate these two, which one's demonstrating more relative strength? The one that's making a higher low, or the one that's taking out this low? Therefore, and it's not always like this, but it was like this a week ago, right? This was a fib retrace or a B wave. This may be a B wave, or this may have been a 5, but knowing which one had more relative strength, and it's not always that way, had you looking for a preferred long in the pound rather than Euro USD. Okay? So I'll also correlate these European currencies to the commodity currencies. And even though the pound was strong, holding this low, this was the beginning of June, the last high we had in the dollar up around, 83.5 or so. But look at Aussie. Here was the June low when Euro was making new lows and the pound was retracing at least 61.8 would be my guess, maybe 78.6. Aussie had barely a 38% pullback. So your preferred long during this dollar correction all the way has been the commodity currency. So these are the leaders. This was your preferred long. Okay? Now, because of this outperformance, they're high, it makes you want to short these, right? They're overvalued. But what should I be looking to short? Should I be looking to short the Aussie, the euro, or the pound? What's right? Well, we talked about that. The Aussie and the Canadian have very tight correlation to the stock market and commodities. Okay? We've had a pretty good run in some of the commodity markets. But you're right, NZG. S&Ps, tight correlation, tightest Aussie USD. So between the three, what's your preferred long? Is it the Aussie? Is it your preferred short? Is it the strength up here? Or something that's a little weaker? Or is it the weak sister? So on strength, the euro should still be your preferred short based upon the correlation that we have between commodity currencies, European currencies, and the weakness within the European currencies. Give me a Y if you understand it. Okay, Keller. And this is really the pair, if you want to simplify it, when EG is trending down, Euro's your preferred short on rallies, and when it's trending up, Euro's your preferred long on pullbacks. When it's trending down, pound is your preferred long on pullbacks. When it's trending up, pound is your preferred short on rallies. You get that? That's really all you need to diagnose pound and euro, is to know the trend of EG. Okay? Now the yen, I correlate with an outside market. Let's take a long-term look at the yen. You guys know what I correlate it with, right? Some people that attend a lot of my seminars, I'm sure you know what I correlate it with, right? Let me bring it up. Guys that know, don't say. Let's see if there's some other people that know what the yen correlates with. Anybody? Okay, here's your answer. So TLTs is an ETF of the 20-year Treasury bond. So if you notice, we've had a pretty good uptrend since April here. And we've made new all-time highs here. Everyone see that? Uptrend, which means higher prices in treasuries, lower yields. So while bonds were going up, US dollar yen was going down. This low was made on the non-farm payroll report that we had at the beginning of June. So if you noticed on the TLT chart, it took out that high, and this moves inversely. And the yen up until this point has not taken out this low. And in fact, these are new all-time highs in treasuries, and the yen is well off its low made last October. So if there's going to be some type of correction in the bond market, you should see some type of rally here in the US dollar yen. This to me still looks like it's within the confines of a symmetrical triangle, and if we can dig in our heels above that low and start turning up, I think you have something special developing here. And then wrapping it up with the Swiss on the correlation. Of course, it's a risk-off currency. It also moves inversely to Euro USD. USD Swiss, Euro USD, closely correlated. And then if you lay a dollar index contract next to the Swiss, it's identical looking. So that's a little bit of my process of correlations and things I look at, and the attempt is to diagnose the preferred long and short based upon how these correlations are working, what kind of market message I'm getting. Like right now I'm getting that there might be a yen bottom, US dollar yen bottom, because at this time treasuries are still trading up around all-time highs, and we're still a couple hundred pips off the October low in US dollar yen. Still think the dollar has a bit more weakness here. Can't rule out one more shot down here. I still wouldn't be pressing the short side of the euro. I know the whole world's bearish, but other things that I teach, we had a nice little RSI divergence here. It's only our first. We could have another one, but I wouldn't be looking to push the long side of the dollar here, or the short side of foreign currencies at this point in time. I'd still give the benefit of the doubt to that we're in a correction to the downside. We'll see how steep it is. Let me just pull up the dollar chart, and we'll wrap it up with that. So here's the pullback from the 84 level. Accurately called that move back up to 84 because the last time the dollar was confirmed, just like the bonds and the euro, there's momentum divergences up here. Could it shoot up one more time and euro break one more time? Yeah, but it's my guess there'd be another divergence. So I think the dollar has room to maneuver back down on the downside here, probably into late August if the 1987 analog about a high in the S&Ps happens around the same time it did in 1987. So I hope that I presented some new ideas to you, also with a few forecasts that I opened your eyes to things that you could start paying attention to, that it gives you another tool to put in your FX trading tool chest. And I want to thank everyone for their attention, and good hunting to everybody. Again, if you have a question, you need to get a hold of me. This is how you do it. I'm not affiliated with anyone at this time. So, Mauricio, Adinda, thank you for facilitating this. Hope everyone has a good weekend. Remember, don't just count your pips, count your blessings. Pips come and go, time is gone forever, so make it count. You're welcome.